What does overage mean? Overage is a weird word. What does it mean? What it means is money that's left over when a property was foreclosed upon, but it's sold for more than the debt. And this can happen in two ways. First, it can happen with a property tax foreclosure. So if you don't pay your real estate taxes and they sell your house, if it sells more than the tax bill, then that extra money left over is an overage. The second way it can happen is through a mortgage foreclosure sale or a deed of trust sale. That's when you don't pay your mortgage or your deed of trust, and the mortgage company says, hey, you didn't pay, we're auctioning off your house. When and if the house sells for more than the amount of money that's due, then that extra money can be claimed by the former owner. It's called an overage. What's really interesting about an overage is it can be a great business opportunity for you. So I'm going to tell you about that in a moment. But let's get into how this thing is created. And also, it has a couple of aliases. They can also be called overbids and a couple other things, and I'll get into that later. But sometimes you're overbids, overages, excess funds is another term. So how do they come about? Let's say that you don't pay your real estate taxes and it goes on for 3 or 4 years. The tax collector is not happy about that, and they are going to sell that house at a public auction to get paid their taxes, because they got to pay the mayor, they got to pay for the library, they got to fix the potholes, collect the trash, remove the snow, do all that stuff, and they need money, and they want their money. If a homeowner gets 3 to 4 years behind, they will sell that house at a public auction. But here's the thing, real estate taxes are not that much money relative to the value of the house. A typical number is just under 2% of the home value per year is the real estate tax bill. So let's take sort of average house in America, which is a $400,000 house. $400,000 house is going to have about an $8,000 a year tax bill. Well, if you let those taxes go for 4 years, you're going to owe $32,000 in taxes, right? $8,000 a year times 4 years. And even if you take penalties and interest into account and just double it to $64,000, you still only owe $64,000 on a $400,000 house. So what's going to happen at that foreclosure auction, that house is going to sell typically for about 75% of its value. So let's say the $400,000 house sells for $300,000. If they collected $300,000 at the sale, but they're only owed $64,000, that means there's over $230,000 left over, right? Just the mathematical difference between $300,000 sale price minus $64,000 owed in taxes. So if you want to be technical, it's $226,000 in extra money left over. That is the overages money. And that money is claimable by the former owner. Now, claimable is an important word. It means that if they put in an application within the applicable time limit, then they'll get that extra money. But if the homeowner doesn't apply for that money, you know what happens to it? It's going to make you mad. The government keeps it. They just put it in their pocket and keep it. Frankly, that's what happens most of the time. There's a study out of the state of Maryland where they pulled together their statewide figures for 3 years in a row, and 70% of the money goes unclaimed every year. 30% of the time the people apply and get their money, 70% of the time they don't claim their money. That is just a crime. It's just a terrible thing. It's one of the reasons I love this business, because I feel like the modern day Robin Hood. You know, I go there and the sheriff has all this money that they shouldn't have, and I take the money and give it back to the people. It's just like Robin Hood. So we actually have a joke in our office about this is the Robin Hood business. What's interesting about it is that the person has to apply. If you apply, they don't give you a hard time. You know, to their credit, the government does give you the money, just like they give you your income tax refund if you apply for it. It's not like they say, well, you know, we know you're owed $10,000, would you take $5,000? They don't do that. They give you the money. It's no problem. So when someone applies, they get the money. But if they don't apply, then the government just keeps the money. So I think this is that's a terrible solution for the government to keep the money. So I made a business out of this that you can do too. So let me tell you about that. This business is we get lists of monies that are held by the government because there was an overage created that hasn't been claimed. And then we get the list of the people that money is claimable by, and we reach out, typically on the phone, or we send them a letter, and we say, hey, you're owed some money. Would you be interested in our help in getting it? And when they sign up, we go and apply for the funds and get it, and we get a percentage of the money for doing that. It's a really great business. And the things I love about it, number one, you're helping people. These are people that really are flat on their back financially. They were so broke, they couldn't keep a roof over their heads. That is really sad. It's devastating to families. It's devastating to couples. You see divorces, families breaking up. It's horrible. And we come in sort of like the white knight riding a white horse. We're coming in and we're getting this big chunk of money that they never would have gotten without us. If you look at the state of Maryland study, 70% chance they wouldn't have ever gotten the money without us, mostly because they just don't know about it. They think, well, the government sold my house, so I guess they keep the money. They don't even think about it. They're like, where am I going to move? Can I bring the dog? How am I going to tell the kids? Can we stay in the school system? How's someone going to take me with my bad credit? Those are the things they're worried about. So we reach out to them, we sign them up, and we go and get them that money. We've made a wonderful business out of it. It's what I would call a heart-centered business where we're truly helping people. And of course, it's a healthy business too, because if you have to have a business, it needs to make the money that you need to live. So we make great money doing this, and we do great work. And if you're interested in this, I'm an attorney, I have a law firm, but you don't need to be an attorney or have a law firm to do this, because this can be done by non-attorneys. So if you're interested, I'm happy to tell you more about this business and to teach you how this might be just the business you're looking for. It's something you can do as a part-time side hustle or just start it on the side, and you can grow it up into a big business if you want to. I have people doing both things. I have people running it as a big, healthy, robust business where that is their full-time occupation. They're business owners, they have a team, they're doing great. I have other people that just do it as sort of a side hustle. I have people that, they're retired and like, if I could do a couple of these a year, make some extra good side money, so I'm not, just trying to get by on Social Security instead of really thriving, doing some traveling and all, it can absolutely do that. And it's also an inexpensive business to get into and an inexpensive business to start, which I also like, because I don't like businesses where you buy a franchise and spend $250,000 by the time you're open the doors, and then you're hoping someone comes in to buy ice cream or whatever you're selling. I'm not a big fan of that. I like things you can just start without a lot of money, just put in some elbow grease, and you can really just build it from scratch. This business is like that. So if you want to know more about it, I prepared a video called Intro to the Overages Business Video. You should see a link up here. If you don't see the link up there, it just means your browser doesn't support it. Then there'll be a link down below the video. But in that video, I really go in depth in the overages business, talk to you about it, explain how you can do this in both tax overages as well as mortgage foreclosure overages. I explain all that and really go more into the details. And if you're interested after that, I'm happy to teach you the business, and you can learn all about that in my Intro to the Overages Business video. So either click on the link up there or go down there, click on the link below me, and I will be happy to teach you this business. It truly is a fulfilling business. It's a meaningful business. It's one that I love, and if this sounds good to you, you'll probably love it too. So click on the link, and I'll see you over at the Intro to the Overages Business video.